In America, lower home prices are fueling gains in resales. Purchases rose 2.5% last month. The government stimulus plan apparently kicking in some shape or form. Lower mortgage rates have also helped support the market. But has housing really hit the bottom? I posed that earlier to Chris Rupke, BTM UFJ's chief economist.
Housing has already collapsed to the lowest possible level, and at this point can only go up. I don't know how fast it's going to go up, but it looks like this was existing home sales today. But I think housing starts have probably bottomed, and the big drag, 1 percentage point drag we've had on GDP in many of the quarters since 2006 should go away in the second quarter, as early as the second quarter.
The Federal Open Market Committee is basically in the bunker right now talking about what is going on. Do they not face a serious dilemma? Since their last meeting, what, 6-7 weeks ago, the 10-year Treasury yield is up about 75 basis points, pushing a lot of the corresponding mortgage rates up as well. They're going to have to do something to address the long-term end of the yield curve. If they don't, what kind of a situation we're going to have on hand? Do you expect some sort of a different mindset? Do they require some out-of-the-box thinking in this confab this time?
Well, all the rumors are that, yes, they're going to strengthen the language and say that rates, no, we really mean it, rates are going to stay down low at very low levels for quite some time. I don't know how they do that. I would kind of poo-poo that, except that the last time I did that, I think on this show, right before the FOMC meeting, they came out and announced the surprise announcement of buying 300 billion government securities. So you never want to turn your back on them. But at this point, realistically, I know it's fashionable to say 10-year yields were 2%. They were 4% a week ago Thursday. What are you going to do about it, Fed? It could put the kibosh on the recovery, especially with mortgage rates going up. But I don't think they can do that easily, especially in the face of all this supply. And the other issue here is I think the Fed chairman has said before when he was a Fed governor that these purchases really have to be conditional. They're conditional on the economic outlook, and they're conditional on financial market conditions. And both those things have improved dramatically. It's like night and day between March and now. Don't forget, on March 6th, the S&P 500 was down 26% this year to date, after falling 38% the year before. I mean, that's why the Fed came out swinging and came out with this $300 billion of government securities. They needed to get a real bang for the buck.